What's going on, guys, and welcome back to another video. What we have going on today, this is the day that we've kind of been waiting for the past month. We finally have our new CPI report, and it shows that today our new CPI report is at 8.5%. So consumer prices rose by 8.5% in July. This was actually less than expected. This is good news, because it went from 9.1% dropped to 8.5%. These are the moves that we've been waiting for. So I want to address what's going on and what we're seeing from this report. I also want to talk about the Federal Reserve's next move and what they are potentially going to do moving forward. And again, this is big because this is that inflection point that we've been waiting for. So let's address what's actually going on. Now today, here are the big numbers. First, we're shown that month over month, inflation was at 0%. So no change. That's big. We also saw core inflation come in at 0.3%. That is actually lower than expected. It was expected to come in at 0.5%. So good news there. And headline inflation, this was expected to come in at 8.7%. So even under the 9.1% that we were at for last month. And well, it came in even lower at 8.5%. So that's very good news on both of those things. Now, if we continue to see lower inflation, and I know a lot of people are wondering, well, is this something that we are expecting, that inflation is just going to keep falling? The answer is yes. If inflation fell from 9.1 to 8.5% for this month, or actually last month, the expectation is we're going to get into the very low 8s, if not into the high 7s for next month. Okay? Now, the reason why I bring this up is for those of you that are collecting Social Security checks, well, your cost of living adjustment is going to be dictated by these 3 months. So we got July, which we just got the report for today at 8.5%. So we'll have July, August, and September. Those 3 months, that's where your cost of living adjustment is going to be dictated by. All right? Just understand, historically, inflation normally does come down a little bit in those 3 months. Now, I don't want to say it's because the government doesn't want to pay a higher cost of living adjustment to Social Security beneficiaries, but honestly, that's what many people are saying. So we'll see what happens with that moving forward. Now, I know a lot of questions that I'm going to get are, where are these big changes? Why did we see inflation go from 9.1% down to 8.5%? I just don't see it. Why are we getting this? Because really, prices have been going up. Yeah, in some cases, prices are going up. But here's where there were some big changes. Gas prices fell by 7.7% in July. That's pretty big. Energy dropped by 4.6%. And over the past 12 months, energy has actually increased by 32.9%. This was actually pretty big that it started to drop. And then even airline fares, they dropped by 7.8% month over month. And a lot of this is due to summer travel slowing down. Many people didn't want to travel. Prices got so insanely high, people stopped traveling. So prices dropped. It's good news. We also know food continued to increase in price, which is never a good sign. And the food index actually increased by 10.9% year over year. This is actually the largest 12-month increase since May of 1979. So it's been a while since we've seen food increase in price by almost 11% in a single year, but that's currently where we're at. Some are expecting food prices will continue to go up over the next couple of months. That is my expectation as well. Food prices are likely to continue to rise before we see them fall, most likely come November and December of 2022. Now, here's one of the big concerns that I had, at least over the last few months or so. And this was that we're going to continue to see high inflation. Well, we've seen high inflation. Even at 8.5%, inflation's still pretty high. A lot of people are going to be impacted. But the real concern that I had was regarding rents. Because if we're seeing rents increase And rents did increase this month as well, according to the CPI report. It actually increased by 0.7% month over month. Annualized, that's 8.4%. Well, that is actually a good sign that we are seeing, we're not seeing rents spike, and especially spike past our current inflation rate. Because if rents are above 8.5% and we got inflation at 8.5%, that's not a good sign. That's not a good sign. That's not something that we want to see. But the good news here is that right now, Americans can still afford to pay their rent. The problem, though, and one of the last things that Americans can or even want to see, is goods and services get more expensive at the same time that rents are going up as well. Because that would be the final nail in the coffin if we see landlords charging additional 10 to 15% for your rent, and at the same time, let's say a dozen eggs. You just got a report this morning saying a dozen eggs just went up 47%. Right? Scary. It is scary if all our food costs are going up, energy bills are going up. Right? Everything's more expensive. And then on top of that, you got to pay more for rent. It's not something you want to see. So good news there is rent has only increased by 0.7%. The expectation is and again, rents lag. So as we move forward throughout the rest of the year, the expectation is rents are likely to stop at some point. We are likely to see rents cap about 9 to 10%. So we'll see what happens there. But again, as soon as we get more information on what's going on there, I promise I will fill you in on all latest news and updates. Now, what does this mean moving forward? Well, from the outside looking in, it looks like the Fed, their rate hikes, they're actually helping slow down inflation. That's good news, because at the last 2 or 3 rate hikes at 75 basis points, it's pretty substantial. So the issue that the Fed is going to have moving forward is, do they take a couple of months off and don't raise rates? Do they slow down and not raise rates as quickly? Maybe they don't do another 75 basis points. Maybe they'd only do 50 basis points. And there was discussions just a couple weeks ago where, or maybe it was last week, where, it was last week after the jobs report, that if we continue to see the jobs market is coming in hotter than expected, well, we could see the Fed jump in and try to slow things down. That's kind of what we're going to see. Now, the Fed isn't going to come in and, I think, force us and push us into an instant recession, even though some say we're already in it. But chances are we're not going to get a 100 basis point rate hike. We will most likely not even get a 75 basis point rate hike. It will most likely be 50 basis points. So that's actually a good sign if we go down to 50, because again, that will still mean we're coming in for potentially a soft landing. And if we do, and we make it, who knows, we just might, well, that would be good news for our economy, for the American people, for our wallets. Everything would be good at that point. Now, because of the Fed, right, raising rates and trying to slow things down, because of this, we're not going to see the whatever the Fed does or did in July. We're not going to see that until potentially September. Okay, it's a lagging indicator. It takes a little bit of time for what the Federal Reserve does in raising rates to slow down the economy. So we need to be very careful with what actually happens. And this is also why some economists are predicting that the Fed, again, isn't going to come in with a 75 basis point rate hike, at least not in September. So that's definitely something that we need to watch for, because I think that's going to be a big move. But here's what I can tell you. What I can tell you is that core inflation is what the Federal Reserve is going to be looking at. They want to know why inflation, or really what inflation's doing, but excluding food and energy. They want to know what that looks like. So right now, being that energy prices are dropping, this could change the headline number, but it won't do anything for core inflation. So keep that in mind, that even though we may see core inflation it went from 9.1 down to 8.5, maybe we see it drop into the 7.5 to 8% range. If that's the case, it looks great, right? We're seeing numbers come down. But if core inflation is still relatively high, that's where the Fed's going to jump in. All right, so don't just look at the headline number of 8.5%. You also got to look at the core number at 0.3%. All right, so one thing I can tell you moving forward, there's going to be a lot of speculation as to whether or not we see inflation continue to run hot. Now, we're also going to get more reports of the Inflation Reduction Act. Is this really bringing down inflation? Well, some are going to say that, oh, the Inflation Reduction Act, it's really helping. It hasn't done a thing. The Inflation Reduction Act has only passed the Senate. It hasn't even passed the House. It's not signed by President Biden. It's done absolutely nothing. And the 8.5%, this CPI report, this is from last month. This is from last month before this bill was even voted on by the Senate. So just keep in mind, the Inflation Reduction Act is not bringing down inflation at this point. Could it? Yeah, eventually, but not right now. So that's what we know at this time. As always, as I know more, I promise I'll come back on and share all latest news and updates. Again, just want to thank you guys for watching. Have a wonderful rest of your day. Consider subscribing, and I'll see you guys on the next one.